everyone. Thank you very much for joining us on this webinar series on open banking brought to us by Plaid. So big thanks to Plaid for supporting this series, and huge thanks to Charlie Kerrigan, Head of Global Fintech at CMS. So Charlie, thanks for joining us. If you could just start, please, by just giving us a super quick overview of what open banking is.
Sure. Well, the first thing to start with, I think, is what's open about open banking. And the answer is information. So we're talking about the opening up of financial information. And that's kind of counterintuitive, because if you're a retail customer, your financial information is sensitive information. Do you really want that opening up? And if you're the holder of information on the corporate side, if you're a bank, your information about your customers is part of your proprietary assets. It enables you to help sell to those customers. So this seems like we're coming from a curious place, but it's a regulatory policy driven change. And a few years ago, the aim of the policymakers was to open up banking to new competitors and new services. And the way to do that, in their view, requires access for other providers to customer information. So you can only provide apps as a new entrant into payment services if you've got the underlying data that would make the apps useful. So open banking is striking a balance from a regulatory and legal perspective between improving the customer experience of retail banking customers, but also ensuring that their information can be shared in a safe and secure way. So there's a balance to it, but it's something that has now had a few years to develop. Many customers aren't aware of it, so the benefits are not as widely shared as they should be, but each year we have slightly higher numbers of customers that are users of the service.
Perfect, thank you. And could you just give us a sort of what were the highlights of the last year of say 2021 when it came to open banking, and have there been any major changes in how regulation has addressed it?
Well, the highlights are generally around uptake. So we're always tracking each year how many retail customers are making use of open banking APIs, because the proof of this isn't in what the regulators want or how the banks are doing, it's are people using it? And in September of this year, we got the latest figures from Open Banking, which is a UK body dealing with open banking. So we've now got 2.5 million users of open banking in the UK, which is still a relatively modest number compared to the number of UK bank account holders that there are, but it continues to grow. And on the other side of the equation, we've now got over 300 providers of open banking services in the UK. It generally split about 1/3 of them, just less than 100, are account providers, and 2/3 of them are third-party technology providers. So open banking, again, is about that balance between the customer data, which is held in accounts, so what you spend your money on, how your spending patterns work, where you save, how you save, where you've got surplus, where you've got a shortfall. So it's using those pieces of information, those data points, to enable better service to be given to customers. So the more customers that are accessing this, the better from the regulator's perspective, and it should be the same from the customer's perspective. Open banking is intended to give customers a better user experience, access to better products, and access to more suitable products for them. Second point, I think, is from a market perspective, is this a market that is succeeding in its terms? And the best measure of success is money provided by investors, and we can see that right across the market. So in the UK, we've got the example of TrueLayer. It's not a household name, but it's now a unicorn, the fastest fintech unicorn in the UK, as valued at a recent funding round. And even larger, than TrueLayer is Plaid, our sponsors, who are a US firm, but famously, they were not acquired by Visa because of competition concerns in the US, but subsequently have valuations in the private markets that far exceed the price that Visa would have paid. So I think the market speaks for itself, and you can't argue with the way that investors look at these things. So two of the best known providers of open banking services attracting those kind of valuations tells you something about the success of the market in 2021.
And what do you see upcoming in the next year in 2022? Are there any new regulations coming in or any changes that you see coming in?
Probably not new regulation. So the regulation behind open banking is the Payment Services Directive. That's originally European regulation. So we've got the opportunity in the UK post-Brexit to look at how we're going to deal with European regulation, in particular in relation to financial services, where it's a hot topic. I don't see a strong call for change in regulation or deregulation in the next year. So I'd say the predictions are likely to be things connected with improvements in the APIs. So again, focused on the customer service. I think whilst open banking is a regulated environment for obvious reasons, because we're talking about the financial information of individuals, it's not a market where the regulation is really the driver of it. What should be the driver is the ability to provide better customer service and better products to retail investors. So we've had, in the early years of open banking, lots of those pie charts that tell you what you're spending your money on, when you're spending it, how you're spending it. So we provided information to customers. I think the next stage that we're starting to see now from the apps is to move from providing information to making that information more actionable. So a good example might be sweeps, automatic sweeps to saving accounts. So I think if we go from giving people information that they look at, but maybe that's of interest to them, but it's not clear what they should do about that. What does the information tell you they should do differently? Getting into the next stage of open banking use cases to say, here's your info, we propose that you do this, and the API lets you do it. So if you give it approval, it will, in my example, sweep surplus in your account to a savings account, get you a good rate on the savings account. So provide that kind of automated nudge to users and get a benefit, a commercial benefit, not just an information benefit. So I think that would be the thing I'd pick out. It should be in product rather than regulation in 2022.
Oh, perfect, thank you. And where you see that coming, you say about the products evolving and the user experience evolving and developing, and of course that's what it's all about, and is especially one of the main challenges that has notoriously faced / troubled crypto companies, being able to have a better, easier user experience. How do you see open banking and the way it's evolving affecting some of the crypto companies going forward? Do you see any changes there, and are you seeing increased demand for crypto companies looking to use and integrate open banking?
Yeah, they should. I think my answer is kind of wrapped up in your question. So if we say that open banking is less about regulation and more about customer service, then to your point, there's an acknowledged question around how good is customer service in the crypto industry. And that's where crypto should be focused, to deliver the best customer service, the best user interface, the most transparent information, the best way of handling users' information, the best way of ensuring that users get the benefit of the information that a crypto firm has about them. So I think that's kind of an easy one because it's connected to an issue that's well known in the industry already.
Thank you. And how do you see this going to affect end users? I mean, I think we've touched on the same thing in terms of user experience, but did you anticipate more users going to crypto companies if they have open banking integrated, or that to attract newer users? Or how do you see that affecting sort of users on an individual or on an institutional level?
That is the philosophy behind it. So open banking was originally driven by the competition authorities rather than the financial regulatory authorities. And the competition authorities were, over a long period, walking around this problem of how do you get a more diversified group of bank account providers. For a long time, there were the high street banks that had the overwhelming number of retail investor bank accounts with them. So the competition authorities, through open banking, were trying to provide a broader choice for customers. So we can see behind that there's a lot of inertia in people moving accounts. It's still a lower level of people moving from one bank account provider to another during each year than I think the competition authorities would like to see. So people have got their long-term relationship with banks. It shows that there's a combination of they do trust the banks that they've had a long-term relationship with, plus there's a perception that it's not interesting enough to move bank accounts. You know, are they all really the same? In which case, what's the point in moving? So the challenge for open banking, I think, is to, and through crypto, it potentially has a way, is for the new providers to provide something which is different to the traditional bank accounts. If you're a crypto firm, so you're not a bank, there are some things that you can't do, but you are obviously able to provide some services to customers that banks currently in the UK are not able to, or choosing not to do. So that combination of, we've now got an opportunity to attract customers to those new services, to new providers through the apps and integrations, that feels to me like a benefit for end users, that they're able to access services and products that they weren't previously accessing before the crypto firms came along.
Thanks. And for crypto companies, what should they be looking at when it comes to open banking? Is there anything that they should be aware of regulation-wise or legal-wise, or any upcoming changes? Or is it just a question of it's a benefit to incorporate open banking to provide another service that's relatively easy to use for their users?
Yeah, so you have two options here as a crypto firm in the broader sense. You can be what the regulator calls inside the regulatory perimeter, in other words, undertaking activities that are regulated, or you can be outside the regulatory perimeter, so you're not providing regulated activities or services. The first are finance firms inside the perimeter. The second are technology firms outside the perimeter. So the key gating item here for the crypto firms is, are they licensed? If they're licensed, there's a broader range of things that they can do. And it's not just licensed as a bank, that's licensed as a payment service provider of various types. So there we start disappearing down the technical rabbit hole of what the regulation is. But from crypto firms' perspective, they all have regulatory advice from lawyers and compliance people. So they're generally making an active choice about what side of the line that they're on. But it's certainly the case that if you want to provide services that involve customers' financial information, you should expect to be within some sort of licensing regime in any jurisdiction in the world.
No, thank you. And for those open banking firms, is that the main thing that they need to be addressing in terms of approaching crypto companies, being aware of the differences in licensing and so forth?
Yeah, so when we're looking at these types of arrangements, we're looking from a starting point of what are the activities that are being undertaken, Are they regulated activities? And what are the parties to those activities? So sometimes it's possible to have two regulated entities entering into a partnership, and sometimes you see one regulated entity and one technology firm entering into a partnership. So each deal is different, but in each case we have to start from that regulatory analysis of, is this something that falls within the regulatory perimeter, and if so, what rules are triggered, and if so, how are they handled?
No, thank you. And then the one big question and a final question for you, of course, in crypto, we've got crypto companies and some of those have been regulated, and now we've got DeFi and decentralized finance companies, and we're starting to see some look at regulation as well. And can you touch on how open banking comes into the DeFi, decentralized finance side of the crypto space? Is that what's next, and how would that work on a practical regulatory point of view?
Yeah, a good question. So all questions around DeFi are
complicated.
Complicated, and as we say, subject to regulatory uncertainty. I think there is a point where a couple of themes intersect. So we know that the big issue for regulators in crypto generally, and in particular in relation to DeFi, is financial crime, ensuring that the industry isn't somehow, whether deliberately or inadvertently, supporting financial crime. And as you and I talk about this a lot, so we know that there is a lot of work going on in the industry, including from service providers, chain analytics firms, data analytics firms, to ensure that financial crime isn't supported in the parts of the industry that are looking to behave in a way that is consistent with how they know regulators think about this. I can see a link in principle to open banking, that crypto's got a reputation problem with regulators. Open banking provides access to financial information. So if you are able to take a responsible view of these things as a crypto firm and ensure that you're running affordability tests, suitability tests, fairness tests in relation to these things, then that is consistent with what the regulators are looking for you to do. Andrew Bailey, the governor of the Bank of England, is famously negative about crypto, but presumably would be less negative if what he understood people were doing entering that market was spending a small amount of money that they were able to afford to lose and putting their funds into a project that they'd got some information about. So open banking, I think, enables that link to be drawn in some ways, that you can run affordability tests and suitability tests if you've got access to customers' financial information. So it's kind of a boring answer, but I think since open banking has got this regulatory background, the best thing that crypto firms could do with it, if they are trying to identify something in the market for them, is to say, how can that help us demonstrate that we are behaving responsibly, taking on the right customers, and ensuring that they are not getting themselves into a position where they could suffer financial distress or something that would be problematic for them. And that, I think, is something that would help them understand where the regulator is coming from, and that might make it easier in some of their conversations with the regulator.
Yeah, thank you. I mean, it's a point that we've touched on lots of times, but crypto can be seen as this big sort of crime-ridden black hole, which isn't really accurate, because I mean, you've got, I think the vast majority of crypto companies are now trying to do good, but also there's just so much more information than ever before, and in theory one has more information about crypto companies and crypto transactions in many cases than anything else. So it's a question of the two working together. Charlie, have you got any last points you'd want to add on what you see coming next for open banking and regulation and how that affects crypto crypto firms and crypto end users?
So I think it is, it's interesting because open banking has been around for a few years now, but it's not widely known. And a lot of the businesses that work in this area, firms like Plaid and TrueLayer, don't have big reputations outside their industry. It would be valuable for individual consumers to have a better understanding of open banking. And one of the things that we know consumers are interested in at the moment is crypto. So I can see open banking is making steady progress, but if it could work with the crypto industry to publicize the fact that there's a way of working with crypto firms and the integrators and APIs that would be to the benefit of customers, because it would enable them to access crypto, but it would enable them to do that in a safe way with responsible firms providing products that are suitable for them. That might be something that drives a bit more energy and market profile for the open banking industry. The open banking trade body wants to raise its profile with consumers so that consumers take advantage of all the good work that's been done so far. And crypto is a high profile industry with consumers. So putting the two together, again, in a way that takes account of the fact that this is sensitive information and the apps and APIs must be used in a responsible way, but the two things can work together for sure.
No, perfect, Charlie. Thank you so much for your insights on this.